Hey everyone, this is your favorite realtor Norm, and today I'm coming to you with some words on different types of home loans. And whether you're a buyer or a seller, you may see this language in your contracts, or maybe you're trying to secure financing and you're looking at all your options. So if you're not buying cash, then you need to look at financing options. Now, about 20% of our sales here in Northern Virginia are cash purchases. So that can be good news because there's no bank, there's less subjectivity to kind of the loan, and it's more clear cut. You're just dealing with the buyer. You're not dealing with an institution, financial institution on the other side. So loan types, there's your traditional conventional loan. I'm sure you've heard of this. There's also the FHA loan. It's the Federal Housing Authority. This is another type of loan. And there's a veterans loan. You might have heard VA financing. And then there's many different types of loans below those. There are some national loans. There are banks that have individual loans that could be applicable to you and your circumstance. These are called portfolio loans. So for example, a big bank may have several different options for you, but they may have this other niche option that works perfectly for you. It's not available anywhere else. And this bank is offering that type of product for you to purchase your next home. So one of the first things you want to do is get in touch with a good mortgage person to talk strategy. See which one of these strategies is going to work best for you and your needs. And maybe it's short-term needs, because think about this, you can refinance. But let's talk about each of the loans for just a second. A conventional loans, that's your typical, let's say, cookie cutter type loan. You can do lots of different things with this loan. You could put down 3%, you could put down 5%, you may be putting down more, like 20, 30, 40, 50, 60%. You always have an option to put down more. Most of my clients want to know what's the least amount they could put down. And so with a conventional loan, you're looking at somewhere between 3.5% to 5% down. Conventional loan limits, they go up to a certain limit, and then you're looking at a jumbo loan above that. Generally, when you're buying a property that's, say, over $1 million, you're looking at jumbo financing. That's going to involve additional interest rate charges. You're borrowing more money. The bank says that's more risk. I got to charge the consumer more to offset the risk. And that's just the way the banks work. So what's the benefit of an FHA type loan? Well, FHA is a Federal Housing Authority, so you got a government-backed product, and it's 3.5% down. Sometimes credit scores can depend on, let's say this, sometimes your loan will depend on your credit score. FHA sometimes can have more leeway in terms of a lower credit score and still qualify the buyer for the purchase. FHA is a great product. Lots of homes are sold in our area with FHA loans. Nothing to be concerned about. The other one is a VA loan, or a Veterans Administration loan. If you served in our military, you have access to this loan. This loan is powerful. What it does is it allows the applicant to use 100% financing to purchase a property. That's right, 100%. So what's the deal with that? Well, it's a great option if your strategy is to borrow 100%. Maybe you're paying off other debts. Maybe that's just what you want to do. But as a veteran, you can borrow 100% of the purchase price up to, and here's the number, that up to a certain limit. So, you might be asking, like, what's that limit? How do the limits work here in Virginia? And it's this. The veterans limit, it's 7. Ooh, I could be mistaken here. Let me double check, because I hate to give you bad info. But the FHA for Northern Virginia, the loan limit is $1,150,000. The loan limit for a veterans loan is $766,550. So anything above that 766-550. For a veteran, you'll need to put down a deposit or arrange other financing. So I hope that's not too confusing, but that's what it is. You have different types of loans available, and really what you want to do is talk over the strategy with a banker, mortgage specialist, so you can see which one works best for you. Now, interesting about the VA loan, it's assumable, meaning if you have a low 3% or a low rate on your loan, you want to sell your home, and you could advertise this loan as assumable for your next buyer. They could come in and possibly step in, take over the loan, and then you could have the home sold and be on your way. Now, there's lots of nuance to this, but it is a possibility. People are doing it. The other type of loan I wanted to share with you all is there are some of those portfolio loans out there. Another type of, if you're a doctor, you can apply for what's called a doctor loan. There are some banks that have this loan. It allows for 100% financing, and then it goes up to a certain limit. But here's the deal. This 100% financing is pretty awesome, right? You don't have to put any money down with this doctor loan. There's no mortgage insurance required. There's certainly student loan debt flexibility on this. And what it does, it allows for the 100% financing. It allows you to get in the property, and then you can go from there. You could refinance at a later date. You could keep this loan until you pay off the home. But this is another way to get into a property, is this doctor loan that's out there for doctors, recent graduates, interns. There's lots of different ways a medical student could use this loan to buy their first property. So any questions around the mortgage, let me know. The other piece of this I want to share is if you're a seller, you're going to see offers that have some type of description around how the buyer is going to purchase your property, whether it's cash, whether it's a conventional loan, FHA, VA, or maybe it's one of these doctor loans. But as a seller, you may want to talk to your agent about how does this financing that the buyer's chosen impact me as we go forward to the closing date, because some of these loans are come with nuances. For instance, if you are working with a VA loan, that loan says that they're also going to inspect the property for some safety issues. And that's something you may want to talk about with your agent. How does that affect you? Conventional loans, sometimes you're not even going to get an appraisal. You might just have kind of like a desktop drive-by appraisal, and you're not getting into things of that nature. But like I said, these are nuanced, but there are so many options to purchase. And right now, even though the rates are higher than what we're used to, that is a sign of the times. Back in the 70s, 80s, we saw rates double digits, 10, 11, 12%. What that meant was that, those folks were paying more. So right now, the best thing to do if you are interested in housing is to go ahead, jump in, grab the property now, enjoy the appreciation over the next few years, and then when and if the rates ever come back down, you could always refinance into the lower rate. And at that time, you could switch loans. Maybe you've got a conventional, you could go FHA. Maybe you've got FHA, you want to go conventional. That's an option to you. The best thing to do is talk with a mortgage professional, talk about strategy, and see which one works best for you. There really are several options, and don't forget about the portfolio loans. So several local lenders have specialized products that can help you get what you want. And while we're setting the table, let me tell you one more thing. If you do have a brokerage account or you have a financial advisor, many times these financial advisors have access to capital that you could borrow uniquely and still get what you want. You're borrowing the money maybe at a lower rate, some type of convenience because you already have this pre-existing condition with the banking institution, and they're going to look favorably on you as a customer because of the pre-existing relationship, and try to offer you different options to make it easy for you to make a purchase. So all of these if you are getting a loan, it's generally contract and then 30 days to get the loan in place, and then you can go to closing. So that's what it takes in general to do it. So when you're making offers, though, many times the people you're competing against may not need financing. So they may not have a contingency for the financing, or maybe um, you're in a good place with your lender. You're what they call a ready buyer, pre-approved ready buyer. This means that you've already gone through underwriting with your banking institution. There's two different people at the bank. You're talking with a mortgage strategist, and they're telling you, giving you advice, giving you your options. You pick one of these options. They give that information to the underwriter. They're going to do all their homework, make sure that everything lines up the way it should, and then they can fund the loan. You can go to settlement. What you can do to get ahead of the curve is go ahead and ask your mortgage strategist to run your information by the underwriter. Go ahead and have them look at everything, last detail, so that when you are making offers, you're going to look like the stronger buyer candidate to the seller, because you've already done your homework. You've already gone through the underwriting process. You really just need a home, and then the bank can do their due diligence and lend the money. Now, if you're a seller, this is exactly what you want to see, because you're working with somebody. You want to know how far along is the buyer in the financing strategy process. Have they even spoken with the bank? Have they made it a full application? Do they have a lender letter? Is it underwritten approved? Were their buyer ready? And how far along are they in the process after that? You can see that not every buyer making offers to sellers has even applied for a loan. So if you are a buyer, you want to beat the competition, go ahead and get underwritten so that you can close just as soon as a seller says yes. If you're a seller, you're going to want to talk to the lending institution and ask those questions. Have your agent ask, how far along is the buyer in the process? Where are they in the underwriting process? These are all questions your agent should be asking, so that they can give you advice on how to make your next right decision. All right. Well, I love talking about real estate. Any questions, concerns, even hallucinations, definitely call Norm.